I'm Matt Bishar with REIT.com, and joining me today to look at the first quarter REIT returns is Brad Case, NAREIT's Senior Vice President of Research and Industry Information. So Brad, there was a lot of expectations about the REIT sector heading into 2012. So 1 quarter in, how do they fare?
Oh, it was another very strong quarter. REITs gained 10.4% in total return just during the quarter. It's actually a little bit less than the broad stock market gained. That's sort of to be expected, given that REITs have outperformed the broad stock market the last 3 years. So, you know, given that they're both equity investments, one can expect that in any given quarter, the REIT industry isn't necessarily going to lead the stock market.
And looking at some of the top performing sectors like industrial, regional malls, lodging, what do you take away from the results of those particular sectors?
Yeah, very, very strong performance. And as you mentioned, the industrial sector gained more than 25% during the quarter. The regional mall sector and hotel sector, very, very strong. I think what we're seeing there is growing confidence among investors that the course of the economic expansion is going to continue, that there's going to be an increase in manufacturing and trading activity, which increases demand for industrial space, that there's going to be an increase in consumer spending out of increased consumer income going forward. Both travel for business purposes and for vacation purposes will increase demand for hotel space. So I think growing confidence in the state of the overall economy.
And lastly, what about the mortgage REIT sector? How would that fare in the first quarter?
Yeah, actually also very strong in the mortgage REIT sector. The mortgage REIT sector as a whole was up 9.2%. Especially strong results for commercial financing mortgage REITs. I suspect there that there's a growing confidence that the overall economy is going to generate the income that commercial mortgage borrowers need to make their mortgage payments going forward. So there's a sense that there's less risk in that sector, but also very strong results for the home financing mortgage sector. And at the same time, you know, mortgage REITs have returned more than 20% per year over the last 3 years. But the dividend yield for mortgage REITs is still very, very high, nearly 14%. So investors at the moment are getting good current income out of those mortgage REITs investments, and they have been getting very strong total returns as well.
Brad, thank you so much for joining us. For more on this and other REIT news and analysis, be sure to visit REIT.com.